Mexico has just flipped the script for its judiciary, and the ripple effects are hitting mining investors hard. On September 1st of this year, the country completed the appointment of its first group of popularly elected judges, including all 9 Supreme Court justices. This is the accumulation of a reform that scrapped the traditional career judiciary, the system built on competence and independence, and a clear separation of powers. And now it's replaced with judges chosen first by Congress and then by popular vote. So what does this all mean? What this means is simple. Judges now owe their positions not to expertise, but to politics. And when the government controls your appointment, it's hard to expect impartiality. For Canadian mining companies in Mexico, this is more than a headline. Courts have traditionally been a backstop, a place to defend licenses, protect permits, and ensure environmental and community disputes are handled fairly. Under the new system, that backstop is shaky at best. Judges may side with government agencies, not the law, turning legal battles into exercises in political alignment rather than justice. Now, Moody's has downgraded Mexico over weakened institutional checks and balances. And major organizations from the U.S. Chamber of Commerce to Human Rights Watch warn that judicial independence is now under threat. The stakes are real. Mining projects in Mexico are deeply regulated, with environmental and community obligations constantly at play. So that means if there is a dispute over a permit or indigenous consultation, that can escalate quickly. And in March of this year, Almaden Minerals saw just that. They saw its mineral rights first suspended and then canceled altogether following court actions triggered by a local community lawsuit. These cases show how incremental local disputes can snowball into major project risks when courts are no longer impartial. That's where the CPTPP, the Comprehensive and Progressive Agreement for the Trans-Pacific Partnership, comes into effect. This trade agreement protects Canadian investors by requiring Mexico to provide fair and equitable treatment, including the access to justice. So if Mexican courts fail to deliver, investors can take the government to an international tribunal through the investor-state dispute settlement mechanism. This is a game changer. And this is why, because it gives companies a way to bypass a politicized judiciary and hold the state accountable. However, there is a catch. Appendix 9-J of the CPTPP forces investors to choose. You either pursue remedies in Mexican courts or you go international, but you can't do both. And you misstep and you could lose your right to ISDS arbitration. So here's the lesson for those in the sector altogether. Legal strategy is now part of operational strategy. So early consultation with ISDS counsel isn't optional, it's essential. Independence and competence in Mexico's judiciary are no longer guaranteed. For investors and mining executives alike, risk assessment can't just be financial or operational anymore. It has to be legal, it has to be strategic and proactive. So understanding international treaties, knowing when and how to leverage arbitration, and planning for political interference is now part of doing business in Mexico. So the real question is this: when the courts are aligned with the government, how will you protect your capital and your project before it's too late? I'm Lyndsay Malchuk with Apaton Media, and this is your Market Knowledge.